About 20 minutes ago at 12:47 p.m., we detected these unusual options coming in, and we are now changing our Cisco trade for earnings today, May 17. It is now 1:15 p.m. As you know, earnings is going to be reported for Cisco just in a few hours after the market closes. And so these are the last few hours to trade earnings. And just yesterday, we made a video about our trade here, this bullish diagonal trade here. And you'll see that it's actually profitable right now, right here, profitable. And we'll be taking profits on this since Cisco did rally today. And we're setting up a different type of trade now based on the data that has come in. And so in this video, we're going to go over that and then also the unusual options that were leading us to do a change on our trades. So without further ado, let's get right to it. At about 11:39, you'll see this trade here for the July 21s. And these are for the 47.5 calls and the 47.5 puts. So this was also seen yesterday, but for a different expiration. It was the Junes yesterday. So today it was the Julys, but it was the same strike prices. By looking at this and looking at the chain, what we figured was that this trade at the 47.5 was actually buying the 47.5 puts and then selling the 47.5 calls. And this is actually a bearish trade. It's a synthetic trade that is bearish. You'll see here Cisco is trading at 47, and it will gain in profit if the price goes down on the x-axis here, down, because this anything above this zero line is profitable. And anything below is a loss. So this is why this is bearish. You can also see the Greeks here, a negative 99 delta. It's just like owning 99 shares of Cisco, but shorting it. So you have negative. So this unusual option that came on the tape today was bearish. And then the 1247, when we see this here, these May 19th over here and the Junes here, what's happening here we believe is also bearish. You'll see here selling the 50 strike calls here, and they're buying the 50 strike puts. That's also quite bearish, to be selling calls and buying puts. The same thing is going on at the 1247 as well. This may look like it is selling 45 strike puts, but we believe they're actually and calls. We think that they're buying the 45 strike puts and selling the 45 strike calls. You can see also from the call side on this side, the $3.23 is much lower than the bid price at 3.25. So this is much more aggressive selling this 45 strike calls, and as you know, selling a call is bearish. So that, and also we have these 12:36 p.m. These are very out the money puts being bought here. These are very out the money hedges at the 3 delta, just in case something very catastrophic happens, which could happen with Cisco. We can see here this big down move down. So Cisco can do, has dropped in very large percentages, but it also has increased as well at times. So we are now going to go over our trade. Based on all of this bearishness, we decided to go bearish now. So our trade is also at this July 21s, what we did was we bought the 47.5 strike calls, and for the 42.5 we sold it. So we bought a bearish put spread, and it cost 131. However, what we're doing is we're also selling a call spread to pay for that. And so we went out to the Junes, a little closer in date, 44 days away, and we sold the 47 strike calls and bought the 52 strike calls. And so by selling this and buying that, we created a call spread that pays 187. So that's more than the debit that we are buying. And so let's put them both together so you can see what the trade is, and we can analyze that. So we are overall collecting a credit of 56. Well, the market current pricing is this right now. And it is actually, the buying power is actually going to be 500 because the width of the call spread is $5. You'll see here, 47 and 52. So it requires $500 buying power. And you'll see here that our break even is actually above the current price here. So Cisco can rally and we will not be at a loss. It could rally to 48.25. And at expiration, we would still not be at a loss. And so that is also very favorable to this trade. This trade, as you can see, when Cisco goes down in price, it will be gaining in profits. It will be above this zero profit loss line on the y-axis. And also, once it goes down, we can let time decay, which is positive, increase more, because as time goes on, this purple line will become that blue line. And it's because our theta is positive here. We also don't have a we don't have a volatility risk. You see the Vega is close to 0.68. That way, after earnings, when volatility decreases, this trade will not have a disadvantage. There will be not much IV crush. Volatility is not going to be against this trade after earnings. So that's why we also like this trade. You'll also, as we move on, as I mentioned, as the dates go on closer to expiration, that purple line starts to become that blue line. And so we would then get be able to have more profits through the theta. However, if it does rally and goes up, we will be able to take the trade-off very quickly, so that it does not have much of a loss. You'll see the loss here is actually not going to become realized to the blue line if we take the trade-off as soon as possible. It's not as low as it would be if given that time. So we would just take the trade-off as soon as possible. If it goes down, then we would let the trade run and let theta gain more for our trade. So it depends. You'll see here how if the price rallies, it goes against our trade, theta becomes negative, so we'll take our trade off. If the price goes in our direction, goes down, theta becomes positive, and we'll leave that trade on to continue to gain in value from theta. And so this is the kind of our plan for this trade we're doing. Yeah, so if this was something, you've learned something from this, please smash that like button, and always make sure you are subscribing. You have that bell icon clicked, because as you can see today, we had to change our trade last day of earnings here, because of the new data coming in. And because we are data-driven traders, we want to base our decisions on any new incoming new data. And we've been monitoring this and seeing things are pointing more towards bearish now for Cisco. And so we decided instead of going bullish, we're going to take our profits from today's bullish trade and then now go bearish in preparation for earnings. Okay. If you want to learn more, you can also watch our video from yesterday. We'll put a link to that at the end of this video. And also keep in mind, earnings is coming up in just a few hours. And as always, take care and good luck, everybody.